Before you consider buying ASML, you really need to understand a few key things about their business and why the stock has fallen by almost 40% in the last 6 months. So in today's video, we're going to discuss this key change that has taken place in the last few months that could have a massive effect on ASML's business. So if you enjoyed the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. ASML is one of the few semiconductor companies that has actually had a poor 2024. Over the last month, it is down around 5%, while over the last 6 months, this stock has fallen almost 30%. And even year to date, this stock is down only 6.14%. I'm not going to sit here and pretend that I know everything about ASML's business. My understanding of it is very limited, so I encourage you to do your own research. However, what I do understand is that ASML produces the machinery that is used to make semiconductors. This is obviously super important because semiconductors are used in a wide range of applications, but most notably right now, they are used in AI applications. And like a lot of other AI related companies, they have seen a massive increase in their earnings and revenue. Both their top and bottom lines over the last couple of years have expanded at a very quick rate. We can see this just by looking at their beats on both their top and bottom line numbers. In their most recent quarter, they beat on EPS by around 8.5%, revenue beating by 4%. Last quarter, they beat by 8.5% again on EPS, beating revenue by around 3%. In March, they beat EPS by 11.5%, missed on revenue by about 2%. And then in December of last year, they beat again by almost 9% on their EPS numbers, beating on revenue by about 5%. Despite these strong earnings announcements, the stock has still fallen around these earnings releases. Back in July, they announced their earnings on the 17th, and the stock fell by around 16% in a matter of a couple of trading days. And that happened again when they announced their earnings on October 16th. The stock fell by almost 22% in a couple of days. And that's despite these very strong numbers. Back in July, they reported EPS numbers of $4.01, which beat analyst expectations of $3.69, again beating by 8.5%. Revenue came through at $6.24 billion, beating analyst expectations by almost 3%, as they expected only $6.07 billion for the quarter. And in October, they reported their earnings and they came through with an EPS number of $5.28, beating analyst expectations of $4.86. On the top line, they reported $7.47 billion, beating analyst expectations of $7.16 billion. So why is it that a company would be performing so well, beating analyst expectations consistently, and yet the stock price would fall by 16% in a matter of a couple of trading days? The main reason for this is the discussion around how the US's restrictions on China could actually affect ASML and their business as a whole, because ASML sources 49% of its sales from China. Here we have a breakdown of their sales in their most recent earnings report, and we can see that in Q3 of 2024, 47% of their sales came from China, and another 15% of their sales came from Taiwan, with 21% of sales coming from the USA. We can look back to Q2 of 2024, and actually 49% of their sales came from China, 11% from Taiwan, and only 3% from the US. And you can look back over their previous earnings reports to see if this is just a one-off or if this is a consistent trend, and it appears to be a very consistent trend, because in 2023, 30% of their sales came from Taiwan, and about 30% of their sales came from China, with only 10% coming from the US. In 2022, 42% of their sales came from Taiwan, 14% from China, and only 7% from the US. And again, this was consistent in 2021 as well, as 44% of their sales came from Taiwan, 16% from China, and only 5% from the US. In 2020, 36% from Taiwan, 18% from China, and 9% from the US. So obviously, restrictions on what can be sold to China could be a huge issue for the business. We're not talking about a little bit of a reduction in the revenue. We're talking about a potential reduction in the revenue of almost 50% over these last 2 quarters. And this is where the more recent drop in the stock price comes in, because they actually announced their earnings on October 15th. The first problem with this is they were supposed to announce the earnings on October 16th. So they released their publication a day earlier because of a technical error. This is not good for investors. They don't want companies doing something simple like releasing their earnings wrong, because it just sends a bad message to investors and what they can expect from this company. The second thing is that the company now has to try and price in this difference in US policy and how it could affect the business. They are now expecting that their 2025 net sales will come in anywhere between $32.7 billion and $38.1 billion, which is in the lower half of the range of previous guidance they provided. And there's no saying whether this is the end for restrictions between the US and China, because with Trump coming into office and the potential of 60+% tariffs on China, we could also see more restrictions on the chip market. So right now, ASML has a trailing 12-month revenue of $28.5 billion. It peaked at $29.8 billion back in December of 2023. If I had to make a prediction based off the trend that we've seen in the percent of sales coming out of China, I think we could potentially see ASML's revenue in a worst case scenario sink back down to the $20 to maybe $22 billion range. My more base case would say that they'll stick somewhere around this $27 to maybe $32 billion range. I think that there are a lot of small players out there that could actually increase their buying of ASML's technology, like the US, like South Korea, like some of these other countries that really want to get into this market. I think the US has been a small player in the chip industry, and we've seen some advancements there with Intel and even TSM expanding their operations in the US. So I think that they could actually recover some of that revenue from countries like the US, even though China could see a drop. If we do see restrictions and further restrictions on China, that could obviously cause less demand and thus actually impact their profitability. Right now, their margins are very solid, but their trailing 12-month EPS is sitting at $19.14. It's down from a peak of $21.52. And 5 years ago, at the end of 2019, it was sitting at $6.88. So they've seen a big advancement in their profitability. However, there is the potential of a little bit of a pullback here as we see some softening in demand because of these restrictions on China. Right now for 2025, analysts have an average EPS estimate of $23.27. The low estimate is sitting at $20.86, and there's a high estimate of $25.25. Revenue is a little bit more interesting because for the current year, they're only expected to grow their revenue by less than 2%. And interestingly enough, 2025, they're still expecting ASML to increase the revenue by 15%. I think this is where things could get a little interesting, because if we do see them dip a lot more in their revenue than investors and people are expecting, that could hurt the stock price in a major way. So I know we've talked about a lot of negative things in this video, but at the end of the day, if you think a lot of these concerns have been priced into the stock, then maybe it's worth buying, because its forward P ratio right now is only at a 26.45. This is a little bit above the S&P 500, but still below the NASDAQ. Overall, if you believe these concerns have been priced in, then right now the stock price is on a dip. If you think that the stock has further to fall, however, because you think more restrictions are going to come into place, or potentially the revenue will be hit harder than investors are thinking, then maybe the stock actually has a little bit more to fall, and it would be better to wait to actually buy into this company. So for me personally, I'm going to wait and see what happens with ASML. I think there's still a lot of question marks around the business and what could happen with Trump coming into office, because there could be the potential of more restrictions that could affect their underlying business in a major way. But that's just my opinion. As I always say, don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, what do you need to make Thanksgiving s'mores? Check the comments down below for the answer. Thanks for watching.